Hey, what's up, guys? Sam here, and I'll be doing the premium video for Friday, November 25th, 2022. So, we got about an hour, 40 minutes to go in a abbreviated trading session. I don't expect too much to change. Looks like it's kind of a slow, choppy day. Kind of normal, flattish type of day for the end of the week, holiday shortened day. So let's dive in here. Let's see what the major markets look like. Let's see if we can kind of put the pieces together before next week. One thing that I would leave you to do on your own is going to be to look at Apple on a 2 day and a 3 day chart because it has some pretty significant squeezes. And as we know, Apple is the key to the game. So if Apple breaks out long or short from those 2 and 3 day squeezes, which it has to, long or short, then that will likely dictate the direction of the next leg. So let's dive in here to SPY first, and then we'll cover everything else. So not too much changes on SPY here so far. This lull looks like a consolidative structure to me so far, right? You had this big gap up after the CPI, and a gap of that magnitude right there being met with some sideways consolidation is completely normal and, and really standard. The zone that I'm looking for is still a little bit higher. The level that I've been calling out in the notes is kind of a moonshot target is 4180. See how I drew the 8 there? It's like basically like a snowman, two zeros on top of each other. I remember in 8th grade, there was this girl in the class I liked, and she saw me make my eights. Well, actually, she didn't see me make my eights. She was just talking about how people who make their eights like this, she doesn't like them. And so from then on, I always try to do it this way. So anytime I make a snowman 8, I always think about Danielle from 7th grade math class. 4180 moonshot target remains live. The zone that I'm looking for here on SPY is basically right here. I mean, the thing is, a lot of the like where the bears are going to have strongholds is basically right here, right? You see between that dotted white line and the 200 period daily moving average. So that's kind of like their stronghold. The moonshot target of 4180 actually gets you a little bit higher than this, so just a tiny overshoot, and then from there I would have to reevaluate to see if anything has changed. But I do think we could still go higher and then still go lower afterwards. So keep that in mind as well. You know, even if we get to that 4180 target on SPX, it still would be technically a lower high, and would keep the pattern of lower highs, lower lows intact. Aside from that, I mean, I don't really see much has changed week over week, right? This has been kind of a slow week, so there's not really much change here. So let's just go ahead and keep on moving forward. Everything still looks correct on the SPY to go higher, um, although with caution. Because also keep in mind, you've had these big moves, but in reality, the market really hasn't gone anywhere new, right? So this is not new territory for the market. So basically, we have to still look at it as a range-bound market, even though there are some points, where it has, pretty good moves or pretty good, counter trend bounces. But basically, if you look at the QQQ here, you're just basically in a giant box between, let's call it 330 and I don't know, let's call it 260, right? So if you draw the middle of the box, roughly about 300, 295 or so, and you look at price, price has been here many, many times before. It would not be that crazy. Q, same thing, weaker in general, right? Not really worth too much extra coverage here. Not really much has happened this week. It's another inside range kind of week. Um, so far, it's constructive though. I don't see anything that was not constructive about this. So this all looks fine as well to me. IWM, same thing. IWM getting this positive cross this week should be pretty welcome for the bulls. You had this negative cross back here on the MACD, and even though you did make a pulse higher, you see how because it pulsed higher on negative underlying energy, it didn't last and it actually falls apart. Keep these setups in mind, right? Don't think that like, oh, this red arrow is just godlike and will, you know, from that red arrow must come a collapse. There's no indicators that work that way. I was thinking about that earlier today. I was like, because there was somebody who made a comment around like, well, this indicator didn't work this one time, or it doesn't work every time. And it's like, well, think about what you just said. If you had an indicator that worked every time, you're literally a trillionaire, right? You would literally become a trillionaire. You would use your indicator on SPY, you would use it on SPX, you would use it on the dollar, you would use it in the bond market, you would use it in the most liquid markets possible, and if it was always correct, you would max all in every single time. You do that 10, 20, 30 times in a row, you're all of a sudden a very big player. But even though there's no indicator that's absolutely perfect, we get a lot of information. Basically, this red arrow told you that the momentum structure should now be viewed very skeptically. And when you get this push higher into this high, and you see how the high happens on a negative orientation, blue is now above the green, right? At that point, then you start looking for unsustainability. This can go on for a while, but at the moment that structure breaks, basically once you break a low, right? You see how you break the low, you come back, you kiss it, and then you fall apart. So that's just things to look for. So the reason I talk about this red arrow is because it complements the idea of this green arrow that has now showed up, right? So does that mean that we just go to the moon from here? No, of course not. We just notice the opposite. But it is an extremely welcome sign because even though you had this monster rally back here, that corresponds with this monster move into the 50. Do you see how it did almost nothing to change the MACD? And now what do you have? Well, you have a flat bottom on price, but the MACD is actually pulsing higher, right? So you have the immediate divergence between a flat bottom and an upward momentum structure, and you have a positive crossover. So in terms of a setup, in terms of what this should look like, that looks exactly as it should. That looks pretty good. So that little conversation I think is worth having. But aside from that, there's not much else here. 188 and a third is your over under in the short term. You do have to get over the yearly VWAP. If it gets over 188 and a third, I think it can get right to about 200 pretty damn quick. Pretty damn quick. But 188 and a third is the level you need to know on IWM. And we'll skip the Dow. We know it looks beautiful. Let's go on to more important things. The Dow is the strongest one by far. And if you happen to have my indicators, look at the DIA on a monthly chart and pay attention to what your high-low is saying. You might you might find a nice Easter egg there. So the dollar here again, we're not going to do a ton of technical work here, right? It's just a matter of does this look like it could reverse higher yet or not? As long as this stays flat to down, which is what currently is it's telling us it wants to do, then that's perfectly fine for everything else that we're looking for. What we're looking for, because we have such decent signals on things like the Russell and the DIA, and then the signals are starting to develop on the SPY, we already have a bias that the market wants to go higher based on those products, but then we look at the peripheral products like the dollar and bonds and VIX just to see if there's risk hiding anywhere there, right? Because what you want to see is you don't necessarily want to see something that confirms your bias, but you want to see that if you have a bias that the rest of the peripheral markets that are difficult to fool, such as the forex market and the credit markets, are also on the same side. If you had a bias that the indexes are along, but then the dollar looks strong, bonds look weak, and VIX looks strong, then you might have to reevaluate. So it's a matter of getting everything on one side of the trade, and when you have that, those tend to be the best setups. So here on the dollar, you had this buy signal back here on the Dixie, and again, it wasn't perfect, right? Like if you bought it there, you had to sit through a pullback, right? But again, keep in mind how this really works. This isn't a buy signal necessarily. It's not how it's intended to be. What it tells you is the momentum is now flipped, and if you make a structural change breaking above that swing high from where it printed, then you got something. So you see how if you waited for the structural break, look how easy it became, right? So now what do you have? Well, you have the opposite of that. So as long as that continues to develop, this is actually still very decent for the bulls overall. we're getting into some critical support levels here, so we'll see how much further they can actually manage to push this, because it's now pretty damn close to major support at 104 to 105. Well, there's actually like huge amounts of support here. It's from 105 to about 103, just a big thick band of support there. But at least as it sits for now, this bodes well for the bulls. If we go to HYG next, HYG is kind of simple. 73, just be above 73, and it's good for the bulls. So we don't actually have to do a ton of work here in terms of like squinting to see what we need to see. Um, the main thing that I see happening here on HYG that also bodes well, very similar to IWM, you have a price lower, indicator higher. You don't have the positive crossover yet, but it's coming, almost certainly. So HYG is easy. Is it above 73? Check. Move on. Bodes well for bulls. A couple things that were brought up in the room today that I think were very keen eye is the volatility products. So the vol products here, the VVIX, just starting with the VVIX, understanding it leads the VIX, start with the VVIX, then go to the VIX. Um, there's not enough here yet, but this product's trying to make kind of a double bottom low at these levels, right? So keep in mind it's like one of those things where, I always describe my mom's cat when I go back home. My mom's cat named Colt. He likes to hunt me around the house, and he's very fast because he's a cat. So he usually gets me. But then I start noticing all these little tells before he attacks. His ears will point back, his eyes get dilated, his tail twitches, right? Like so he's got tells, and then he makes the jump. If I wait for him to jump, it's too late. He's faster than me. By the time he's in the air, he's already basically attacked me because I can't get out of the way by then. But if I can catch all these little tells, the twitch, the eyes, the tail, then I can move before he jumps and he doesn't get me anymore. So that's what's going on here with the Vivix. It's like it's got like I just gave you three tells. Like he's got the ears, the eyes, and the tail. So far, this is like just the ears. Like there's not enough here for me to say Colt's gonna jump on us, and by Colt I mean the Vix. But there's an ear twitch here, so that we must at least respect the potential that a cat is going to jump. But there's not really much there quite just yet, so I wouldn't quite look for ghosts or monsters under the bed. VIX here, this is just a beatdown, right? So you notice the divergence here between VIX and VVIX. VVIX already has kind of a double bottom, whereas VIX is just free fall nonstop. Again, though, it just kind of confirms what we were just talking about, right? Like, there's maybe something that we should be slightly paying attention to on the VVIX. If that continues to develop, then we'll have two of the three, right? We'll have the ears and we'll have the tail twitch, and all we're missing is the dilated eyes. But at least for now, it all looks pretty standard, pretty normal, and I don't see too much of an issue here quite just yet. So the only minor issue relative to the giantness of everything else that looks decent is that the VVIX it has that structure. But again, it needs to develop a little bit more. It's still very early to call that an issue. So aside from that, I think we can kind of just wrap it up here. Let's go back to SPX. And I'm going to show this chart here on. I'm going to remove all the studies. So this is kind of where I think the playing field is. Um, so that upper magenta trend line, everyone kind of has that. I don't. Although I have to respect it because it is such a massive trend line and it's rather clean, right? So that kind of gets you in the neighborhood of 4100, which is where I think most people are going to be looking. It also, the 4100 right around this area overlaps with the daily 200. So I think most people are going to be looking there. Where I'm telling you I'm looking is actually closer to 4180, which is right about here. So if we project that across, it was basically your highs as well, right? If you project that 4180 across, it overlaps with a lot of different levels, right? So kind of play ball with that idea a little bit, see if you can kind of either make sense of it or not. But I'm still looking for that 4180 level, and And then kind of the benchmark level that I'm using down here is 39.98. So 39.98 needs to continue to hold. If it does, then I think we can go up there and hit that 41.80 target. The main thing I do want to stress though is just a little bit of caution against unbridled bullishness, right? Because the VIX is now down its daily lower Bollinger. The VVIX is at its it does have kind of that double bottom structure that we talked about, the whole cult dynamic there. So whenever you have that, even though the market can continue higher, the edges and the risk to reward shifts a little bit, right? It's just basically like less meat on the bone. You want to attack when there's the most amount of meat on the bone. If you're going to risk your, if you're going to risk your money or your life or whatever it is, whatever analogy I want to go with here, let's just go with money. If you're going to risk your money on a position, you want it to have as many things in going for you as possible, right? And usually with VIX down at the daily lower Bollinger and VVIX making a double bottom against its lows, while the market can't continue going higher from that, it is the risk to reward shifts a little bit, right? And you adjust for that with position sizing and being a little bit faster on entries and exits, and being moving up your stops and being a lot more disciplined with the distance to your stop. So this is kind of the playing field that I'm working with here. Be aware that if it breaks even in a little bit, like let's say you get one fat candle that's down, let's say 100 points on Monday. And I'm not saying that happens, but just 100-point candle here in a day, which we have seen before, would break most of this structure. It would actually destroy it. So careful, right? The market looks good. Everything that we've looked at looks good. The dollar looks good for bulls. The bonds look decent. HYG looks decent. IWM has positive crossovers. DIA is already leading. So most things are still correct. But the main thing is recognize how much meat is left on the bone, how much risk is there, and then position size accordingly. So we'll have a lot more for you guys that are part of the weekend notes. If you want to check those out, you can check those out for a trial. They're like $7 for the trial if you sign up. You'll get this weekend's notes, so it'll be a very good first trial for you if you haven't seen those. But in the notes, we'll cover the sectors. We'll do a lot deeper dive than what we just did here, and we'll see if we can make sense of the thing. For now, I'm expecting to see relatively good setups with a setup to continue into that 4180 target. And the only little bit of caution that I will have going into next week is the volatility products are generally at historical places where they would start to firm up a little bit. All right, guys, that's my time. Have a great Friday, a great long weekend for some of you, and we'll do it again on Monday. Cheers.